the Fed seems to be changing its tune on interest rates.
Well, they have to. Like, the real estate market is fluctuating right now.
Well, it's not even that. It's, Chris Waller on Monday met in South Korea, and he's, trying to be one of the next elected
Well, he's
to replace
trying to
Powell.
replace Powell, right?
Yeah.
In a year, right?
Yeah, but it was interesting because, he basically said, they would consider cutting rates starting in the fall as long as, inflation continues to go down. He didn't say once I hit 2%. He just said once inflation continues to go down, if the labor market seemed robust, et cetera, et cetera. And he kind of was being really positive about everything. He even mentioned the tariffs and how, while there will be inflation from those, it's temporary and they don't expect
transitory. Come on, gotta get the.
But I also just think that in general, he's trying to put a spin, and we talked about this on our podcast a few weeks ago, where because these interest rates are going up, the Fed is going to have to cut rates. So now we're hearing them change their tune, and it could be because he's trying to vie for Powell's position, but it also could be because they know they have to lower rates. So they're trying to paint this sunny picture of an environment where you would lower rates to justify.
So let's back up a little bit. Everyone believes that inflation is, pending, right? The real estate market is in flux. Of the top 50 markets that Redfin monitors, only 7 are considered sellers markets right now. So we've gone from having more sellers than buyers. So the amount of listings is almost at 2 million, and the buyers is 1.5, let's say, somewhere in there. There's like 500,000 more sellers than there are buyers. And there are certain markets that are really in trouble, in Florida, in Texas, and obviously Phoenix, Atlanta. So all of that stuff basically means that the consumer's pulling back, right? And so I think that the Fed's going to have to be somewhat aggressive in the next 6 months.
Well, we've talked about on our show before, we also have all of the national debt coming due as well.
We're maturing, right? So you have that as well, right? So you have all these factors, not to mention the fact that Trump's kind of pissed off the world, and the dollar's, not necessarily the safe haven anymore, and so there's kind of a flight out of dollars into gold and other things, Bitcoin and all those kinds of things, and basically just non-dollar, whatever, you know what I mean, whatever that means. So you have all these things happening, and I will tell you I don't see that the Fed has any other choice. They're going to have to lower rates to spur the economy.
Well, it's really interesting, right? Because all around us, we can see our economy's in trouble. We know the housing market is frozen. We know the rates are high. We know that people are losing their jobs. We know that people are going through their savings and relying on credit cards and doing the, afterpay and all that stuff. And yet he's sitting there telling everyone that they expect the U.S. economy to be in good shape this fall, so they could cut rates.
Right.
They expect inflation will be under control. They expect everything's going to be humming along. Like, you look at it two ways. He's either telling Trump what he wants to hear, or he knows they have to cut rates, and the only way they can justify it is to just lie to all of us, even though everything we're seeing around us.
What?
Well, it was kind of like when Biden was saying there's all these new jobs added to the economy about a year and a half ago, and everyone's like, what are you talking about?
And I know, and then we've got the tax bill, right?
Yep, and that's going to be inflationary for sure.
Right. Yep. So that's going to hit here the next, 30, 60 days? Yeah, so the end of June, right? So the Fed meets June 17th and 18th, and then the Senate meets toward the end of June, right? So it's going to be a very interesting summer.
Yeah, it is going to be, interesting. It's just, it's like things that they could do is, they're showing the slowing CPI, but they're kind of ignoring the sticky inflation. Like our services are still going up, our groceries are still going up.
Okay, I'm gonna put a marker out there. I'm gonna put my foot in the sand here, Jerry. I'm gonna say that the Fed on June 18th is going to announce a 0.5 point
rate
cut.
You think so, really?
That's what I'm gonna. And here's why. because they don't meet again until the end of July. And then there's a little bit of time after that. So basically, in the next 90 to 120 days, they only meet a couple times.
Okay.
So I think that they might do an aggressive, I know that's going out there. A lot of people are going to say quarter point.
I think so. They're saying no cuts till September, most people.
There you go. I'm going to go half a point.
Okay.
That's my prediction. Because I actually think things are unraveling.
Yeah.
Yeah. I think the world is upset at us. Over all this tariffs of the Trump tantrums, or what do they call the Trump tariff tantrums, or whatever they call it. That's 100% true. Unemployment's up. That's 100% true. The real estate market is significantly worse than it was 1 year ago.
Mm-hmm.
Rates are at 7%.
Mm-hmm.
And inflation's ticking up a little bit. And if this new tax policy gets passed, which it does look like it will, that's also inflationary. So it's going to be a rough year. And don't forget about lag. There's always a lag. So if they do a half a point, that's of course is a complete guess. It won't really kick in until Q4. So,
right.
So that's why I think they're going to have to get ahead of it. Unless they do what they did last time when inflation hit 9.1. It took them a while to increase rates, if you remember. So I don't know if they're going to do that.
Well, the problem with the debt, though, is that the current interest rates, which are under 5% for most of our debt, and it's renewing at the end of this month, every 1% increase adds hundreds of billions of dollars in interest cost. So and I know everyone says, who cares, we're in debt, just print. It's not that easy. Like printing creates inflation too, So
here's another thing. We all know Powell's going to be out of that seat at the end of April next year, May, I think it is, next year, right? So, and we know there's bad blood between Trump and Powell, even though Trump appointed Powell. So now you got politics going on. So you got the politics of the Fed governors, I guess, right? And they're all this. Chris Waller for sure wants to be chair, right? Mm-hmm. So I think there's probably what always goes on, the back room, let's because it's a vote.
So basically, you have to have inflation one way or the other, because they either have to lower rates, which is going to be inflationary, or they have to print money.
Yeah,
or they have to print money, though, because they have to pay this debt or interest payments. And I mean, yes, we can print money, but printing money is inflationary.
And they are already printing, that's for sure. If they lower rates, it will definitely spur the economy. Mm-hmm. And potentially could create some bubbles.
Yeah, absolutely.
But the one thing for obviously, I know we talk about real estate a lot on this channel, obviously, but if they lower rates a half a point, let's say, or 3/4 of a point by the end of the year, that is going to spur the real estate market.
Yeah,
it's going to generate sales. It's going to generate refinances. It's going to be positive. And let's don't forget, not just does it do that, but it helps title companies, it helps mortgage companies, it helps realtors, it helps, there's a whole industry, right, that kind of revolves around this interest rate issue, not to mention the automobiles and all the other things. I think that we're going to start to see rate cuts through this year and into the next. Trump already made it super clear that that's what he wants.
It is what he wants. But did you see Jamie Dimon's warning this weekend too? I mean, there's a lot going on.
What was it?
He basically was saying that we need to start focusing on the fundamentals, and we're at a point now where, in 40 years we might not be the reserve currency if we keep the same, kind of excessive spending, not cutting the budget. He's kind of bashing Trump a little for focusing on crypto instead of just defense and, all the different things that are more fundamental to focus on. And obviously with the bond market, right? He's saying there's a big disruption in that. And if people can't trust to invest in the U.S., that's going to be a big problem for us.
That's a real thing. Like if we're buying stuff from, China, and we're paying them in U.S. dollars, they don't want them.
Right.
Right. Because of what we're doing with our currency. So that, a weak currency or a currency is not any longer a safe haven. So that's a real issue.
When he even said, he goes, everyone's so focused on China. He's like, we are our biggest threat, not China, And when he was saying that, he means from all this printing, right? So like when the conversation we just had, people saying, well, we just keep printing. It's fine. It's been fine, but it's going to have consequences. You can't, every fiat currency has gone away because of all the printing. So we're just in that stage. The only thing saving us is for the reserve currency. And if we screw that up, we can still print, but it's going to be a lot more expensive to get imports and all that, those kind of things.
It's already started this weekend at that party we were at. I was talking to this guy that does a lot of plumbing products for Home Depot. His client is Home Depot and Lowe's. So it's a very, very old company. He said that it was started by his friend's father, and he's been doing it for 25 years. So, it sounds like upwards of a 50-year-old business. And they do all kinds of stuff from China. And he said what happened when the tariffs hit is they couldn't get anything. Mm-hmm. Home Depot freaked out, right? They couldn't get anything because he was sourcing everything from China. And then he had spent all this time getting these, placements in Home Depot, right? And so he said then when he released it, he goes, they bought everything. He's like, Home Depot just bought everything they could. And so that's what's going on kind of behind the scenes.
Right.
Right. And the reality is if tariffs hit and we start to run out of products, kind of like we did during the supply chain stuff during the pandemic, we're going to see prices go up. You remember when we were building a house and how expensive a Sub-Zero refrigerator was?
And you had to buy it and store it.
Yeah,
and pay
like
for
there's
storage.
all these things like the things that we take for granted that are on the shelf. We have to look for alternatives or maybe without.
Right.
And I think that, that's all in jeopardy because I don't think people realize how connected we are to really understand how connected we are to outside of the United States. I do believe that Trump knows, and that's what he's trying to reverse. But the other issue, we were talking at the Rebel Capitalist Conference, is everybody was laughing because there's no way that U.S. workers are going to work in these manufacturing plants to make these kinds of things. Like you're
going to really upset our audience over this because, well, maybe not if you say it, but when I said it on YouTube a couple of weeks ago, oh my God, I got bashed.
Well, by the way, I don't know which way it's going to go, but it's a fair statement. Mm-hmm. When they're pushing for minimum wage to go up, and by the way, I'm a proponent of people making a good wage and a good living, 100%. However, when that doesn't work, if you want things at a cheap price, right. So that's a
significantly bigger price. I mean, it's not like, oh yeah, we pay our people $5 more an hour, so you have to calculate that in. If you want a good, well-paying job that you can, live on, and you want to make at least $30 an hour, we're probably paying the people in China, my guess would be $2 an hour. So it is a significantly bigger price tag to move those jobs over and produce it here.
Yeah. It is. Yeah. I by the way, and of course, there's lag and all that kind of stuff. And what this guy I was talking to, he goes, I just moved everything to Vietnam.
Yeah.
So he's like, I had to do it. I didn't want to do it because I had these long relationships, but I needed to stay in business. And so basically, he's still going to have stuff come from out of the country.
Yeah, and I think a lot of people are. And I think that that's something maybe that will come out of what Trump's doing, I don't know, planned or not planned, is for people to move things out of China into these other countries like India, Vietnam.
Yep. Go buy industrial warehouses.
But the thought of it coming here, I mean, you just have to think about it from just a basic economic. The thought of it coming here, it would be way cheaper to get AI or machines to do the work of people wherever you can if you're paying them $30 an hour. And I'm really being generous with 30 because really $30 an hour is not necessarily a amazing paying job anymore. So you know what I mean? But it's like, how much can you pay each person to put these things together and still sell them where people are going to afford them?
Well, it's already in place. I mean,
Yeah.
there's factories, that have basically hardly anybody in them.
Yeah.
As we know.
Yeah.
But the actual making of a product, right, and the stuff that we're getting so many things cheaply from out of the country, not just China, and it's going to take so long. And even if we get it, let's say, even if they, plant a sign and get a big warehouse and start making it here, the cost to make whatever it is going to be higher.
And you're going to have more of an uproar from the people. So we talk about this, the difference between the middle class, the lower class and the middle class, and the upper class has gotten distinctively bigger over 2020.
There's a bigger gap.
But there's a bigger gap. But one thing is, goods are cheap. So people can still go on Amazon and they can get a coat for $10 and they can get shoes for $15 and they can just have things.
God forbid that goes away in our house.
But if you make that all expensive, you're going, like, the one thing people are feeling probably still good about is they can go buy goods cheaply. It gives them, a little bit of a high. They like it. If you make everything expensive, so now people can't afford rent and they can't afford cars and they can't afford new outfits and they can't afford TVs and you're going to get more upset people.
I agree. Yeah.
And so I don't know. It'll be interesting, but we have to figure something out because we're just printing and printing and printing, and the world's living off of our currency.
Unsustainable. We are going to have inflation. The tax policy is definitely going to drive that. Who knows what'll shake out with the tariffs? I guess we're in the middle of a pause. We definitely have higher unemployment, and interest rates are at 7%. And real estate prices are coming down in 43 out of 50 markets.
Yep.
Those are all facts. That's not speculation. It's not opinion. And so it's the very, very, very beginning of, the only thing that can stop that is cheap money.
Mm-hmm.
I mean, period. Like, we have to lower, you're going to have to get people to spend. And it's always, this is the direction that the government has to take, is we have to consume.
It's funny because there's actually two options: the cheap money or let everything crash and reset, right?
Which is what Jamie Dimon was talking about.
Yep. But, traditionally our government doesn't do that because it's not good for their voter base. It's not good for really, it's not good for, people that have assets, right? And so typically they don't do it. And watch over the next few months and see what they do. It'll be interesting.
I think that, it's interesting. I always try to look beyond the comments from somebody like a Jamie Dimon. And he's obviously extremely brilliant, but there's no place to go from a currency that's safer than the U.S. currency. There's no place.
Right now.
Period.
Mm-hmm.
Correct. There's no place to go. So he can make that comment, and a lot of people make that comment, and I can't disagree that people are upset. But there has to be an angle from his standpoint. Like, for example, maybe he's got heavy positions in foreign investments or something like that, right? There's always an angle when somebody says something like that. But the reality is that we're on an unsustainable path.
Mm-hmm.
We have, let's just look at all the entitlement programs, the Social Security and the Medicaid and all the stuff we have there. We're severely in debt already. And the Doge thing seemed to have kind of spittled out a little bit, right? That doesn't seem to be producing the fruit like we thought. And as you said, we have the government debt resetting. And when the government debt resets, a lot of it is really low interest rates. So it's very similar.
All the way back from 2008.
Yeah. It's very similar to, like if you're sitting on a low interest mortgage on your home, you've owned it for a long time, and you don't want to refinance at 7%. Same thing. But in this particular case, the government can put pressure on the Fed. And they're supposed to be independent.
Well, and also in this particular case, you're refinancing your house that's trillions of dollars. So the interest is much, much different between, 4 and 7%.
Yeah. And so as we pay people in dollars, and as most of you might know, there's more U.S. dollars outside of the U.S. than there is inside. It's called the euro dollar. And because the world trades in dollars. So, if one country is buying from another country, they actually trade in dollars. And that's kind of how it works.
Yep. So it'll be interesting to see.
Well, time will tell. 0.5 point. Take it to the bank. So if this type of economic discussion interests you, check out this podcast where we break down how tariffs affect the economy.